I've prepared a trendline trading special, and in this video we're going to take a look at various trades, and I will show you exactly how to use trend lines, how to use them in a multi-time frame, higher to lower time frame context, how to find the best entries, how to use trend lines to protect your trades with a stop loss, how to find targets, and a lot of practical tips and tricks that you can use right away when it comes to trading with trend lines. As you know, I don't like wasting time, so let's jump into trade number one. And we're starting here with a higher time frame, and this is more for a day trading approach because the higher time frame here is the 2 hour, and then we will drop to a very low time frame to time our trades. But what we want to see on the higher time frame is first of all the general market direction. What do we see here? From the top left to where we are currently, the market has moved lower. Here was a distribution pattern, then the market broke into a new low, had its first consolidation, moved lower, came back, made another lower high, and we are starting to draw now this trend line. Obviously, we don't have enough information yet. There are only 2 swing points that we have, and for a trend line, you always need 3 confirmed touch points. Why is that? Because a trend line, you can always connect any 2 random swing points, since you're very flexible when drawing a trend line. But we need 3 touch points on a trend line, and only then we know that we have a valid trend line. So in this case, what we would wait for is the market to come back to this trend line and then give us some more confirmation. This happened a little bit later. You can see I zoomed in a little bit. The market has touched the trend line to the pip. And at this point, we are still on the higher time frame, 2 hour. We would now drop to a lower time frame and look for trading opportunities away from the trend line, so we are trading in this higher time frame context. So we are on the lower time frame, 30-minute, and what we can see here is, first of all, we have the touch point of the trend line here at the top. We have a little bit of a rejection already, but you can see the last candle is still green. So obviously we don't want to enter in such a strong bullish trending phase. And we also drew here this short-term trend line here that will help us get into a trade. So we connect the ultimate swing low here, which is also here this double or triple bottom. Then we have a swing point here and then here. So we do have 3 swing points, which is then good for this trend line validation. And we just have to wait a little bit longer to get a little bit more information. So now we are moving to a 15-minute time frame to see what is the price action telling us here. And a few candles later, you can see we have a lot more context. And context is always what you want to look for in your trades. A trend line is good, but it's not strong enough. The lower time frame is not good, or not good on its own. But if we can combine a lot of multiple layers of confluence, that's where we want to trade. So on the lower time frame, 15-minute, we have this double top pattern. You can see the market is moving lower. We have lower highs. We have a nice support level that we can use here. And we have this confirmed trend line. So all we would do now is wait for the breakout and then either trade the breakout or the retest. You can see just 1 candle later, we have a very nice bullish sequence. We have made multiple lower highs. We have the breakout through the swing low and through the trend line. So very meaningful breakout signal. A few candles later, if you didn't decide to trade the breakout, or if you are maybe now sitting on your trade and you don't know what to do, the market is coming back into the previous breakout area. Those retests are very, very common. So the market has a tendency to retest the swing points, which then has a few implications. First of all, if we trade a breakout, we have to be very careful with moving our stop loss. A lot of traders make the mistake of moving the stop loss to break even too soon. Moving a stop to break even may be okay, but if you do it too aggressively, you will just suffocate your trade, and then you will be out when those retests happen. And you don't want to be out when a retest happens because they're so common. They don't invalidate the short idea yet. So be careful with that. If you're out, but you're looking for a new trading opportunity, around here is then where you look for more shorting opportunities. You could, for example, drop to an even lower time frame, maybe all the way to the 5-minute, and then trade a breakout out of this range here. And so you have a few options. A few candles later, this is how it looked. You can see the retest held. You don't want to be out because nothing has changed about the short bias here of the trade. And you can see the market broke the last swing low, came back in, retested it, another retest, and then the downtrend unfolded here. Let's take a look at another trade. And here we are now looking at a bearish continuation as well. We are clearly in an overall downtrend, no question about that. From the top left to where we are currently, the market is only making lower lows and lower highs. So we definitely want to trade short. We have here an early trend line. We have 2 touch points. We need a third one. Without a third one, this is not a trend line. So what we are doing is just simply wait and see, is the market reacting to this trend line, yes or no? And it seems like it does. So you can see we are getting our third touch point. We also have here a local double top, which adds a little bit more context to this trade, or to this trade idea so far. So at this point, what we would do is jump to a lower time frame, and we are looking for microstructure. So we are on the 30-minute time frame now. You can see we have an inner trend line. Previous support on a trend line turns into resistance twice. This is here the inflection point. This is the higher time frame trend line that is coming down. This is our lower time frame trend line. They meet up in this very nice spot and provide resistance. Here is the double top that I was referring to. We saw it very nicely on the daily. We have a lower trend line as well, which is helping us for trade timing. We have a local low, so we can very nicely define our lower time frame here and make sense of this price chart. And again, we are looking for a breakout with context, and you can see the market made lower highs after hitting this resistance. So now let's recount. What do we have? We have the higher time frame bearish trend that we are trading into, context or confluence number 1. We have this inflection point where the market found resistance. We have the double top here. We have a broken trend line. We have a broken swing low. We have lower highs here, and we have a strong bearish engulfing candle. I've lost count, but those are definitely multiple confluence factors that are all pointing towards continuation on the short term lower time frame. You can see this is what happens. The market traded into the lower lows here, hit the previous swing low, had a little bit of a struggle, moved lower eventually, but didn't really fully break lower. So at this point, you probably would be better off taking an exit wherever it is around here. But in general, this is how you want to approach it. We can jump back to the higher time frame. This is the previous example that we looked at. The market came back to this trend line for a 4th time now. So at this point, we can even look for more shorting opportunities on the lower time frame. So let's jump back to the lower time frame. And again, we want to build confluence. What we see here, we have a short-term trend line here on the lower side. We have a previous resistance that we can use, but it's not enough yet. We need a little bit more information. So let's just wait and see what happens. The market is trading into the trend line. It is breaking the trend line. We see we have this little fake out here on the trend line from the higher time frame, which is okay. On the lower time frame, it can be sometimes a little bit messy around those areas. You can see we have a retest. So whereas previously this wasn't a fully validated trend line, we have 1 and 2 touch points. Now we're getting our 3rd touch point from underneath. So if we want to be really safe as you can be in trading, there's always some risk. We could wait for the market to confirm the trend line here from the downside and then look for a continuation now. So at this point, you could think about either going short right away on the lower time frame, or you could drop to maybe even a lower time frame such as the 5-minute and look for another microstructure here. Since the market is fractal, this works really well. So you could drop to a lower time frame, look for another of those trendline breakouts, and then time your trade even more aggressively. You can see that retest held. The market started making lower lows and lower highs until it reached this double or triple bottom, and then also broke into a new high. So really nice confluence here on those 2 trade examples. Trade number 3, let's take a look. And we are starting here on the 4-hour time frame, and we want to look at the market and the trend structure. What do we have? We have a very strong uptrend here going on. You can see we have this upward moving trend, multiple trend waves. And then we have a flag pattern, or it could be a flag. We don't know at this point. We could either see a reversal to the downside or a continuation. However, the most important thing is when you see something like that is that you don't get involved as long as the market is trading in a consolidation. This is where a lot of traders go wrong because they try to predict what may happen next, and then they either go long because they believe a bullish continuation will occur, or they believe that a bearish reversal is going to occur. However, at this point in time, there's no way of knowing that, and it would be a pure gamble to do that. So I would always recommend to stay on the sidelines as long as the market is trading such a consolidation. You can very, very easily improve your trading results by just waiting a few candles longer and actually waiting for the market to pick a direction instead of trying to predict it. You can see a few candles later the market has chosen, it seems like, a side. So it's trying to break out of the trend line. You can see we have definitely a valid trend line, 1, 2, 3 touch points. We can see we have higher lows here. At this point, it's very aggressive to trade a bullish continuation. In this case, you would probably be much better off to wait for a pullback. A few candles later, this is what happens. You can see the market has broken out here. It is then coming back into the previous swing point to retest it, not once but twice. At the same time, it has established this consolidation above the consolidation. So after a flag, we have now something like a double top or double bottom or just a rectangle. And in this case, what you can very nicely do in such a case is just wait for the breakout into a new high. And then what you often see is that the momentum continues into the trend direction. So just a reminder, we are trading in an overall bullish trend. The market tried to sell off here, or try to at least the bears try to take over, but obviously it doesn't look very strong. The market in a long period of time just moved short a little bit. So it makes sense to look for long continuations here, especially with the context now. You can see the market is breaking above this area, has broken out of the range, retested the highs again and now has lows. It held, the market was able to stay above it, didn't fall back into the range, and now you can see we are looking at a great continuation. So again, we are laying multiple areas of confluence on top of each other. We have the bullish uptrend, so we are looking for continuations, but we're only looking for continuations once this consolidation is over. So we're trading into a new fresh trend or impulse wave. We wait for the market to establish the consolidation here above the highs, make sure it can establish itself above it, and then go in with a bullish breakout candle, or even here with another retest. So you have multiple layers of confluence that you can stack, and then you can trade those very nice impulse waves effectively. Trade number 4, another very interesting multi-time frame approach, and you can see we're starting on the higher time frames. And here it looks a little bit different. You can see the market came from an uptrend, and it seems like this is a distribution pattern. We have some support area here, and we have the starting of this trend line. So we have the highest point here, a second swing point, and it seems like we are confirming the trend line here. We have 2 inside candles after a very strong push. So that makes it quite interesting is to see is there exhaustion on the lower time frame, and then we look for shorting opportunities. We're on a 2 hour, so we drop to a lower time frame, in this case the 30-minute. And here we look for microstructure. And we have the microstructure right away. So this is how the microstructure looks. We have the pin bar, we have a huge bullish candle, and then 2 inside candles. And this is how it looks on the lower time frame. This is the pin bar, this is the strong bullish candle, and those are our 2 inside candles. We have very nicely defined support and resistance area. We have 2 lower highs, so we have a higher high here, a lower high, and a lower high. And we're getting here with a breakout a lower low. So again, we are not only trading a trend line, but we're trading into the trend context on the higher time frame. We're trading the higher time frame trend line retest. We're trading the lower time frame trend structure reversal, and we're trading a lower time frame breakout. You can see afterwards the market didn't fully commit, and the market came back into your entry. If you're out, totally fine. Nothing works 100%, not even trend lines, surprisingly. So if you see that the market is not agreeing with your trade idea, get out, cut your loss, minimize the loss, protect your downside, and then we can come up with a new trading plan. And the market in this case offers a very nice context. What we see here is that the market made a low, and now we have a double low. We have 2 lower lows at this point. So if you're out and you still believe in the trade idea, and I don't see a reason why you shouldn't, because the market hasn't broken the structure, we are trading below the trend line, the higher time frame still agrees. Now we could wait for the market to break into a new lower low and then look for a second opportunity. And this is what happens afterward. The market came lower, retested the highs. That's why we don't move our stop loss to break even too soon. We are conservative with our stop loss, put it outside of the range, and then you can survive something like that easily. So you can see it really pays off to not be too aggressive. Another example here, we come back into the trend line a little bit later. So this is still here. What you can see is the higher time frame trend line. We come back into the trend line a few candles or a few days later, and we are looking for more continuation to the downside. But right now we don't have much. We only see that there's a huge strong bullish move, and that's not enough. Obviously we don't want to go short into such a strong bullish move. So what we do is nothing. We just wait out and see what the market is going to give us. A few candles later, it looks a little bit better. We can probably estimate some support level in here, which is now being used again. We have lower highs, which is good. We have the level that we can use for breakout trading. And I'm always happy to see if the market offers us a breakout level. Otherwise, we cannot really find or time our trade because an entry would be quite random. But if the market offers you a breakout level, then we can add a little bit more consistency and reduce the noise in our trading. A few candles later, we have the break and retest pattern. You can see this huge engulfing candle after the market broke out, came back into it. And this could have been here now your continuation entry. Again, the market didn't agree with you. You probably are out by this point because we also traded back into the highest highs. So at this point, again, I cannot stress enough the importance of learning to cut the loss. In trading, and I've been trading for more than 14 years, and I've mentored hundreds and hundreds of traders, and I've seen that one of the most important skills a trader has to learn if he wants to trade professionally and profitably is to be able to cut the losses. Nothing works 100%, and you should write this on your wall. Nothing works 100% in trading. So it's really important that we understand that cutting a trade is totally fine. We are not going to get attached to a trade. We're not going to get married to a trade. We move on. One trade in the big scheme of things, if you want to do this for the next 10, 20, 30 years, means absolutely nothing. So don't let one loss get out of hand and ruin your trading. So we are out of the trade, and then we're just waiting for more context. And we get more context just a little bit later. The market made this fake out here above the highs, faked out, moved lower, and then started making lower highs. Again, we are coming from a higher time frame where we want to look for shorts. And now we have a lot of context. We have the double top here with a fake out. We see that the trend line is holding. We see the market has made 2 lower highs. And we can see we have a good bearish breakout sequence. So now we can think about adding a new short position. We have a retest, which if you're not in the breakout, you could get in now. And you have even more confluence. So now you can see we are stacking the confluence in our favor. And a few candles later, this is what happens. So again, we don't have to be right 100% of the time. You won't be anyway, no matter how hard you try. So what we want to do is minimize the loss when we are not right. And then when the good trades come around like this, it can really take care of itself. A big problem that many traders have is that they let the loss get out of hand. And then when the good trades comes around, they can't make up for the loss. So what they do is over leverage, push their luck. They don't exit their trade when they should. They try to be too greedy, and then the market turns around. And then even on the good trades, they don't make enough money. And then it becomes really like a vicious cycle because the bad trades are too big, the winning trades are not big enough, or you mismanage them risk-wise, and then you're losing in them as well. So make sure to really learn the skill of cutting a loss. It's going to be very, very important long-term. It's going to pay off big time. And then when the good trades come around, you can approach it much, much more relaxed and capitalize on it.